You guys have flagged an uptick when it comes to production as well as reserves. Is this the right strategy given that the weakness more globally, US dollar denominated, that we've seen in gold prices recently?
Yeah, thanks, Heidi. Thanks for having us on the show. Look, you're right in saying in US terms it has weakened, but I think that's bottomed, and I think there's upside in that US. But in Australia, the whole sector is performing very, very well, very strong. And as you spoke about with margins, we're achieving sort of 50% EBITDA margins. So we are somewhat insulated with the Australian gold price and our Australian cost base. But it's also a testament to building inventory, building reserves and building production, which there flows through to building cash flow. So the general sector in Australia is travelling very, very well.
Your outlook sounds broadly positive. What are the main drivers for you to be optimistic?
Look, our optimism, it fundamentally comes from our Tier 1 assets, and we believe we're in a Tier 1 jurisdiction. So, if you're in North America or in Australia, your sovereign risk is low, your confidence is high to invest that money. So Northern Star, when we look at investing capital, we're on Tier 1 assets, multi-million ounce systems. So our confidence is with what's in our control, which is our costs, our productivities, the technical skill set to replace reserves. And that's really where we get that. It'd be no different to agriculture. You can't change the weather. We can't change the gold price. But what we can do is influence their productivities, our cost base, and manage those margins very, very well.
Stuart, you weren't able to see the chart we brought up just a short while ago, which was showing how gold prices in Aussie dollar terms have remained strong through the course of this, and it's in our GTV library. But this, of course, is a great help to you, as you've already said in your answer to Heidi earlier. The thing is, how does it affect also your break-even here? And what is your break-even, and, how is that changing?
Yeah, look, it is changing a little bit. We're seeing some cost pressure come on through the industry. But really for Northern Star, it's really driven by productivity. So that all-in sustaining cost sits around the $1,000 all-in Australian, and that's sort of somewhat coming up. Our mid-range would be about 1,075 Australian dollars an ounce. In US terms, with the exchange rate where it is, it's sub 800 US an ounce. So there's still quite a healthy margin there. What's unique, I guess, with Northern Star, we're underground-focused miners. We have high-grade mines. We have ability to flex our production and move our cost profile and our cut-off grades to bring minerals or mineral inventory in and out of our mine plan. And that's very important to be able to do. In an open pit sense, you must remove everything and stockpile it. In an underground, you can be quite selective without sterilising your ore body. So we think we're in a healthy space to leverage on gold going up and also insulate from it coming off.
Stuart, what about heading overseas at any stage? Do you foresee that happening? And if so, do you have a model which would actually work abroad?
Oh, look, that's a big question for a lot of Aussies. What do they do at the moment? And you're probably seeing some consideration in other sectors with consolidation. But I think a lot of the Aussies down this part of the world have good, healthy balance sheets. They're investing organically in their own assets, and what we see as a backdrop is us growing our resources. We've just delivered nearly 16 million ounce resource, of which highly confident, measured in indicators, nearly 10 million ounces of that. We see converting that. We've committed to a $60 million exploration spend in FY19, which is the largest spend we've committed to date in the company. And we've got the people, we've got the capacity, we've got the ore bodies to deliver growth in that regard. And that's where we're getting great returns. As far as inorganic growth, lots of people, you've got to look always. That's what resources companies should do. But I guess come back to Northern Star, We're very disciplined in employing capital, and that's proven well for us to date.
Stuart, what about another aspect of your business, and that is, of course, and front and centre, the gold price, down 6%, nearly 7% through the course of this year. How much of that is a function of dollar strength, or has that correlation broken down in your view? And where do you see gold prices toward the end of the year now?
Look, we do look at that, and we do read the commentary. It's hard to have a view of of where that is, because you can find an answer from every source in a different direction, up, down or sideways. Look, I still think the US, in US terms, that it has bottomed, and there's growth in that regard. And the exchange rate does give us some balance in that regard. But, the mid-1600s in Aussie dollar terms is still a very, very good gold price. And, we've seen it go up to 1800 in the last 2 years. So we think that has opportunity to lift. But I guess we look at costs, and that's what we can control.
Stuart, at what point does the weakness, does the Aussie dollar effect stop insulating you from that weakness? And has it also surprised you that, Rish mentioned the correlation between dollar and gold. Has it surprised you that you haven't seen that correlation between gold and the need for a safe haven, given all the volatility and political uncertainty that's abound?
You're absolutely correct. You would normally think the more turbulence would be the safe haven of gold, and you therefore push those prices, which you haven't seen. Look, as far as where does it get tight? We're lowest quartile global cost curve, so there's a lot of companies and businesses that I guess are ore bodies that are affected prior to us. So it's important to stick in that lowest quartile cost band. But I think there's a natural balance there as well. As that comes off, I think we've hit peak gold globally. You've seen you're seeing declining resources, declining reserves across the majors. So I think that even that just slight scarcity or the view of declining profile will keep a base under the gold price. So a couple of $100 off will certainly stress some businesses, but I think what you see is the bounce and deflect back up. Thanks.
What about M&A? What's sort of in the pipeline? Are you actively looking? I know that you completed the South Kalgoorlie project earlier this year. What else are you interested in at the moment?
Yeah, so correctly, that was a really good win-and-win deal for us in South Kalgoorlie, and it really complemented the portfolio that we hold here in Kalgoorlie and enabled us to secure sort of 3.2 million tonnes per annum capacity. So that's a sort of a really smart deal that was done this year, and sort of the compliments to the team. As far as other things, I guess I've said before, we always look at everything always, but you've really got to measure it up against your own skill set, your own capacity, and your own assets. And I think that's what a lot of Aussies are struggling with at the moment is what's around. So for us, organic growth, it's returning great returns. And we keep doing that. We're going to grow our reserves. We
Stuart,
basically grow our
Stuart, very quickly, your share price, is it sustainable?
We're growing. We're a growth stock. Look, we've got that DNA in our business. So, it certainly has opportunity to move beyond where we are.